Today somebody asked what the name of that song was. I don't know. Sorry. Can't tell you. I didn't make the video. Good morning, everybody. Welcome to the morning show. Spencer Israel here with Steve Strazza. JC Parets will be joining us in a little bit. He's not here now. We should all send him good vibes. He is attempting, and I say attempting, to drop his 3-year-old off at their very first day of daycare, preschool, daycare. I guess preschool. I'm not quite sure, honestly. So that's what he's doing right now. When he gets back, he'll be on the show. Around that time as well, we'll be joined by David Lundgren, by the way. So we got David Lundgren, JC Parets eventually, Kimmy Sokoloff. Mary is joining us. It's Wednesday. Got to have mornings with Mary. So a lot going on the show this morning. I want to talk about some disaster stocks of the day. Holy moly. Foot Locker, Peloton, AMC is nearing an all-time low for those who care. Anyway, that's the rundown. Good morning, chat. Strazza's here. I'm here. You're here. Let's roll. All right.
Hey, buddy.
Okay, shout out to Jerry Carey, who says he did a 2-second Google search, which I was incapable of doing, apparently. And he says the name of the song in the countdown is called No Loss. There we go. No Loss. That's our motto here. How you doing?
I thought it was an original hit from John Carlo and the team.
I don't know. I never know anymore. All right. How's it going, man? What's on your mind? Anything? Thoughts? Stuff?
The guys at the studio, they make music over there.
They do.
They do great stuff.
They do.
So, JC, daycare or preschool? She's 3. So which is it? What comes first?
Daycare comes first, but
I think it's pre. I think
it's pre-K. It's pre-K. Yeah, it's
pre-K or preschool. Yeah. All right.
I don't know, honestly. Yeah. So good luck to him, and he'll be back in a little bit. Although, funny enough, he just said that they found out last night that the first day was today. Didn't even know. So anyway, okay, let's do some state of the markets. State of the markets this morning is probably just disaster stocks, but let's get into it. All right.
You know, I love how you guys tell me I'm doing this 2 minutes before we go on air.
What can you say? I don't know.
All right, let's go.
Okay, so we should acknowledge, just from an overall standpoint, that Bonds TLT went up yesterday. Bonds had a good day, first good day in I don't know how long. So that's something. But I don't really have any broad macro thoughts other than the S&P continues to search for that level, whatever that level is going to be, right? That right now, I suppose the focus is on the low from the other day, from Friday. I don't know. I don't really have any broad macro thoughts besides watch that low from Friday across the board.
Throw up the first chart.
Will do.
It's 4.3 and 4.4 are those ranges in the 10 and the 30. I think those are really the levels that you have to watch. It seems like tech stocks are watching those levels. And if you zoom out, the next chart, it really shows just how important this whole 4% zone is. You know, I know I'm saying 4.3, 4.4, but if you look at that base there, what's going on with the charts?
Well, you updated them in real time, so I'm updating them on my end too. There you go.
Look at this thing. This is a giant base. If this was a stock, we would be given upside targets, buying this thing hand over fist. Listen, if we're above this 4 or 4.3, 4.4, right? That's the past 10-month range that we look to be resolving higher from now on the prior chart. We're above these levels. And again, it's a big zone, right? 4 to 4.5, call it. We're heading higher, and then the question becomes, where do we go? Are we talking 5.5, 6.5? But
Well,
it's not just the
well,
U.S.
well, now,
It's rates all over the world.
yeah,
Right?
it's
You
true.
look at developed Europe. France is 30-year new
Wait,
high.
hold on. I have like a basic question. Okay, help me understand. This has been eating at me for a few months now. Actually,
Yeah.
I always thought, and I could be wrong, I could be misinformed, that the federal funds rate is the one rate to rule them all, and the direction of that rate, broadly speaking, dictates the direction of rates everywhere else. Now, the federal funds rate supposedly is going to stop going up, supposedly,
Yeah.
right? And yet, all the other rates are not. So
And
what's the deal there?
two things. I'll answer your question, but first I want to make a point. The risk is very much to the upside for yields, right? And the reason for that is because, like you just said, the Fed is done, right? If you look at Fed fund futures, no more hikes. That's it. It's just a matter of when does the first cut come. If, God forbid, we break out of these ranges and enter an environment where the market starts to think we do start hiking again, and the Fed funds futures have to price that in, big change from the bond market, right? Fed fund or you just said the Fed funds rate. Does that
Yes.
drive the whole curve? No, because the longer end of the curve, 10, 20, 30, is controlled far less by central bank decisions and far more by the open market. And what it does is it prices in likelihood of economic recession and what the Fed is going to have to do in the future. And
Okay.
that's how we get inverted, right? When the long end is seeing something different from the short end.
Okay. So all this focus on the Fed funds rate is really a reflection on the implications for the shorter end of the curve, and the 10-year and the 30-year, and that's a separate conversation essentially.
The long end of the curve, think of the 10 and 30 as the market, right?
Right.
The short end, Fed funds, to the 3 month, the 1 year,
Sure.
that's going to be very much controlled by the Fed.
Okay.
That's why we're not seeing new highs in the short end yet, right? Because of what you're saying. The Fed is saying no more hikes, right? So the short end is kind of stuck. But the 10 and the 30 are starting to go. So that's the market saying maybe the Fed needs to change course and change its tone a little bit here.
Got it. Thank you for clearing that up. It's been bugging me for a while. I am not a bond guru by
Right.
any stretch of the imagination.
And if you think about it, Spencer, right, the wider that gap gets, the more and more it starts to suggest that the Fed will have to change course. And if we break out of these 10-month ranges, just from a chartist perspective, supply and demand, you think we get a nice little leg higher here.
Or that.
The short end going to do? And do Fed fund futures start to change? And when the market starts to price in more hikes, in the theoretical, case that they do, what do risk assets look like? Growth stocks are already under pressure.
Right, sure. Or it just suggests that somebody is wrong. I mean, if the spread's widening, if the curve is diverging or inverting, I guess more, right? And then, the market says one thing on the long end and the short end says the other thing with the Fed. It suggests that one of the two is wrong.
Yeah.
But we don't know who that could. I mean, most people would probably say the Fed is wrong, but you never know. Maybe the Fed's right.
Spencer, it's almost always that way.
I know that.
I'm no Fed historian.
I know that.
They've ever been right.
Yes, I'm aware of that much. But look, yeah, the assumption is that the Fed would be wrong, but it's just an assumption. We don't really know.
So when does he get to Jackson's Hole? And
when does he get there? I don't know. But he's talking on Friday.
It's Friday.
Yeah, he probably. I assume he gets there Thursday. Maybe today. I have no idea.
Well,
I don't know his calendar.
I will be watching the FedEx Cup Championship.
Yeah. I will not be watching coverage of Jackson Hole, because I saw a long time ago. It was like somebody was making fun of, I think, Janet Yellen, and or maybe it was I don't even know, maybe it was Bernanke, and they were making fun of Fed speak more broadly, and it was it was a paragraph. It was the Fed talking about zebras, right? And it was like sometimes they're black with white stripes, other times they're white with black stripes, and it's like, and I was like, yes, that is Fed speak to me. It all is just gibberish in my head. I don't understand anything. So,
You know, I think it's quite like the learned craft
yeah,
that these Fed chairmen they find themselves in positions to constantly be saying things when really the best move is to say nothing. So they, Alan Greenspan really was the one to pioneer this, but they have this incredible knack for saying nothing and saying so much at the same time. It's like you can watch a Fed presser and literally feel like you're losing your mind.
yeah, oh yeah. I've been there. I've been there, man.
They just talk in circles. And do you remember like Yellen's voice? They tend to have like these just voices also that are just hard to listen to. They've all been that way. Not just Yellen. Greenspan was tough to listen to. I mean, Powell is as dry as it gets.
I mean, he's an economist, so
comes with the territory, I guess. Listen, there's a question in the chat. I think we've done enough on the Fed, right? There's a question in the chat about silver. Should we look at some gold?
Silver? Wait, who asked about silver?
I think I saw something in the chat on silver, right?
Did you?
Yeah. So, guys, full disclosure here.
Do we like SLV? That was the question.
Yeah. So, full disclosure, we brought almost no charts today. I was totally unprepared for this segment. So
we have live charts. What do you mean?
Yeah, no, but let's take questions from the chat. This is good. Listen, not going to have charts for a day. We are low staff here. Alfonso's out this week.
I wonder some earnings too.
JC's at kindergarten school.
Here, live charting, baby. Let's roll. That's how we roll.
You're gonna live chart?
I got it up right now. Took 2 seconds, but you can do it. You can do it too.
I was gonna talk about gold miners on a relative basis. Oh, good God. Yeah. So it's a mess. Zoom out.
Okay.
No, you don't have a 200 day for me. So if
I got nothing for you.
If Spencer did have a long-term moving average on this chart, it would be stuck sideways. These things are going nowhere. And when you zoom out, it's really been going on since what? Middle of 2020. Mm-hmm. So 3 years of just absolute messiness. When you zoom way out on something like gold, and I know I keep talking about gold, the question was about silver. They're going to move together, right? So if the question is, should I buy silver? I'm going to look at a chart of gold, right? Silver's not going to go up without gold. When you zoom way out on gold, way out, last cycle, boom, that's it. Ian wrote a great post. Go check it out on the blog just the other day about how gold's been hanging out up above, what is it, 1720? It's the closing high back in 2011.
What's the actual?
So anyways, those 2011 highs, right? We've been hanging out up here and have actually closed above those old highs from last cycle. I think like 3 or 4 months already for the first time. The last couple times we came up to this level, tested these old highs, got rejected pretty quickly. Maybe that staying power or resiliency is speaking to an eventual upside resolution. Again, the more times the level is tested, the more likely it is to break. You see gold just knocking on the door at these former highs over and over and over again, just over the past few years. If we stay up here and stay tight, it's only a matter of time before we do break higher. And then you absolutely want to be long gold and you want to be long silver for the juice, but you got to be patient. This structure needs to work itself out and give us some sort of a, decisive upside resolution before getting involved in precious metals. And frankly, as good as this looks potentially when we zoom out, the risk appetite indicators and all the intermarket stuff continues to suggest, a tough environment for precious metals, at least over the short and intermediate term.
All right, can we do some earnings here because we got some doozies today?
Yeah. All right. What are we gonna do? We're gonna do Peloton.
No, I want to start with Foot Locker. It just train wreck city. Holy
I want to hear the stats.
All right. Foot Locker has had the year from hell, basically. This is a pre-market chart, give you a sense of the damage this morning.
Yeah.
I without
How much is it down, Spencer, right now? It's 24 to
31%.
Yeah, wow. It's literally just lost a third of its value.
Yeah, yes. I'm not an expert in the company, and I would love to know what has happened between last year to this year. So I went back and I looked at the last few quarters because I, like you, Steve, I thought I looked at the stock this morning. I thought we've done this before in Foot Locker, haven't we?
Spencer, this has to be a known thing because that's the first thing I thought too. Like when you mentioned Foot Locker, like what did I say to you? I was like, I feel like they dropped 30% once a year.
We've done this before, so and yes, we have. So basically, here's the situation on Foot Locker, and how do I get away from?
Give me some stats, and then I got a walk chart we can talk about.
Okay, so in November, is when they reported their Q4 from last year. They had a really good Q4 last year. Last fiscal year, this company made about $5 per share for the year. That was their full year EPS, $5 a share. So, in knowing that, the street consensus estimates for this fiscal year for EPS was mid $4 range. Maybe they're not going to have as good of a year last year as they had this year, but it's going to be, or this year as they had last year, but it's going to be an okay year. They'll probably make around $4.50 for the year on an EPS basis. So fast forward to March when they actually report their or when they actually give their guidance for the fiscal year. Right? They report their Q4 and they give their guidance for this year. They say, all right, actually, we're going to make like $3.50 on a full year EPS basis. Not 4.5 like you thought, like 3.5. So if I can bring up here. So
they just broke that news today.
No. I'm talking about March. This is from March. This is 6 months ago. So in March, they're like, we're actually going to make $3.50, not 4.5, and so the street adjusted, and that was that. Now fast forward to May for their next earnings report, and they said, yeah, I know last time we said that we were going to make $3.50 for the year. Actually, we're going to make like low $2 for the year, like $2.25 for the year on a full year EPS basis. So, and that's what that huge gap is, right? Because that was in May.
27% last quarter.
Yeah. So
30%
that was in
here today.
So that was in May. Now they come out again today, and they say, yeah, I know last time we said we were going to make around $2.25. Actually, it'll be like in the $1 range. So, and by the way, we are suspending our dividend and saying a whole bunch of bad stuff.
Oh, that's bad.
Oh yeah, it's really bad. So basically, whatever happened last year that made them earn $5 per share is not happening this year.
How could a business that selling shoes change so much?
I don't know. I wish I did. But it has been a train wreck of a calendar year for these guys. There's 3 quarters in a row they've come out and lowered the bar. I don't know. I don't know what to make of this, honestly. But there you go. So if we zoom way out on this chart, you can just see pre-market. Oh, let's keep going here.
Throw up the slides. I got.
Okay. Wow. We're gonna open here at a 13-year low. All right. Yeah, let's see what you got. Slide. Which is it? 4?
4 and 5. Yeah. Okay. 5 really. I mean, look, this is a particularly bad day. If we do start on the right-hand side of the screen now, that's going to be today's move. And it's looking like it's going to be over 30%. This would be the biggest one-day collapse from this stock ever. Let's see. Yeah.
Probably.
Ever. But just since, 2017 here? I mean, you can't own this thing through earnings reports. If we go back to the left-hand side of the chart, This was starting at the first red circle. May of 2017, down like 17%. August of 2017, down almost 30%. Then we had, we tried to rally back a little bit through 2018, and then another earnings bomb in May of 2019, like 15, 16%. August 2019 was a big sell off, and another earnings collapse in March of 2020. And then February 2022, just recent history, down 29, almost 30%. And then, like you talked about, the May quarter was terrible, 27%. This is just a landmine, minefield of pre-market sell-offs based on earnings.
Yeah, disaster, absolute disaster. And if for some reason you owned it for the dividend, well, you just lost that too.
So it's gone. No dividend. They didn't.
No, I don't know if it's gone forever. They just said they're pausing it. I don't know. I'm not really sure.
Their EPS just went from 5 to 1, from what you described.
Like mid ones.
There's no more dividend.
5 to $1.50 in 1 year, essentially. And what's funny is in the fourth quarter of last year, they actually beat estimates. They came in higher than the street was expecting. So what the heck happened?
I don't know. Again, I know I already said it. I don't know how they could have such a volatile business selling shoes. All right.
Our guest is here. You want to bring him on, and then we'll come back to this?
Of course.
I was asked to milk the conversation with David a little bit longer.
Why not wait until 9 to bring him on? Because JC is going to be heartbroken if he misses.
No, yes. JC is like, okay, you know what? We can do that. David, are you cool to wait a few minutes? Because JC, when he found out that David was on today, and then he would miss the beginning of the conversation, he was very upset. So, all right, then let's do Peloton, and then we'll bring David on, and then JC will be on. We'll be back, and then it'll all be one happy family.
More earnings.
So Peloton, this is the other disaster of the day. Okay,
is it me, or is this just a particularly bad day for earnings?
Train wreck. Well, not actually, not everywhere.
Got any beats? Any good charts we could talk about?
Yeah, there is one. I'm sure you'll like it. But anyway, Peloton, it's disaster. They're losing money, coming in below estimates. Sales.
Not only are they losing money, but they're guiding and saying they're going to keep losing money. What a disaster. Yeah. How long? Okay. Here's the question with Peloton. Did I throw in the chart? Put a chart up there for you. The question with Peloton is this. Is the brand even worth anything at this point? In other words, do they get acquired, or does this thing just slowly go to zero? Business is falling apart. They can't make. They're not making money. They're trying to switch to be like an app first business and get away from being like an expensive, bike manufacturer. That's not working at all. They're trying to get into like corporate relationships, right, and try to have people sign up for Peloton through work. And colleges too, like
the B2B thing is what they're pivoting to, right? They're trying to do they're basically trying to work with businesses and sell them a bunch of Pelotons, right?
I mean, total disaster. Do they get bought or no?
I've always thought there's got to be some value, not at the levels from a couple of years ago, but I mean the bike and the hardware and the software, it's got to be worth, and the customers are worth something, are they not?
They could have sold themselves.
Not at those prices. They couldn't have.
Years ago, 2022, when the stock was coming off, they could have got a deal done.
Yeah, maybe.
Peloton was a big trend. Totally fizzled out. I don't know. The brand is worth a whole lot less than it was at the peak.
Oh, sure. Yeah. What's the all-time high here on Peloton?
I don't know. Last time I've been to a gym,
all-time high 171. This morning it's 4.
So, like, Spencer, are these like at Planet Fitnesses and stuff?
My gym actually does not have Pelotons. It's like a Peloton, but it's I don't know. It's a different brand. I don't know. So
okay,
they're not the only person to stick an iPad on a bike.
What's that other company? Is it Polaris? No, there's another stationary bike company I would love to.
Well, there's Nautilus. It's
Nautilus. That's the one.
yeah, NLS. I mean, yeah, just a trend, just a
I mean,
classic fitness fad.
it's a bad business. Look at Nautilus's stock. Oh my
I know.
God.
I know.
Pull it up. Throw up live chart.
Live charts for the win.
I mean, Nautilus looks worse than Peloton. Peloton's at a 97%. It's hard to say. Peloton's at a 97% drawdown. Yeah, both of these stocks are basically at 97%.
Nautilus is under $1.
This is amazing.
Uh,
I don't know what these companies are doing. Well, I know what Peloton's doing. It's not working.
All right,
I don't think there's much else to say about it.
There isn't. I just got word from JC that he'll be on in a minute. So, with that being said, let's bring on David Lundgren. He is here. He is our guest, and he came prepared with charts, which makes me happy.
We need charts.
All right, let's go.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Hey, David.
Morning, gents. How you doing?
David, you're not a fan of the Foot Locker conversation?
If it's just when a stock peaked in 2015 and we spend more than 30 seconds talking about it, I just lose my focus.
I get it.
The earnings reactions from this stock over the years just
it's pretty consistent. Yeah, somebody went in your comments said we should have shorted Dick's after the Foot Locker miss.
Yeah,
it's all a mess.
Is it me or are these retailers really coming under pressure this earnings season?
Yeah, I mean, it kind of doesn't look great. Consumers obviously a pretty mixed bag. There's a lot of things going on beneath the surface. Obviously, home builders have been strong.
Yeah.
To everybody's chagrin, given what interest rates are doing, and mortgage rates are higher than they've been in I don't know how many years, 20 years, and home builders keep going higher for their own fundamental drivers, which is that's why I'm a trend follower. Market figures it out before most people. So.
Right, like you wouldn't think in this environment with the things that we're hearing that home builders were one of the strongest groups, but you paid attention to relative strength. You knew last year.
Yeah, exactly right.
All right, so David, you probably just heard me saying, I don't know what's going on over here with this production crew. We have no charts today. We have no JC. So you came with all the charts. Let's go through them. David supplied charts today.
Wasn't ready for that, but yeah.
Supply and demand here. Supply and demand. We have a demand.
Well, I mean, this is just the slide deck I figured I'd send over to you guys for the this is for my monthly video that I send to clients, and so I just figured we could use this for some fodder for today's discussion. But I mean, the point of the discussion was that there's a lot of confusion right now, and the reality is that when the only time it's not confusing is at the top. I mean, like if we can with perfect clarity tell you why everything's rosy and fine, that's when you should worry. And the fact that like we're just talking about home builders and they're doing things that just don't make sense to individuals, but they clearly make sense to the market because it is happening. That to me just doesn't sound like it's there's anything at risk. I mean, I'm not saying that there's a lot of charts in here that shows that we have a lot of work to do before we can say we're in a bull market. But I just think that given where everything's inflected, enough things are positive that the fact that we haven't repaired all the charts is actually bullish, because I think about like bear markets. I think about like chopping wood, and we've basically spent the last 18 months chopping wood. So we have this massive pile of wood just waiting for a spark, and the bigger the pile, the bigger the fire. And
you're talking about bases.
Bases, exactly. And so I actually have a slide in here. It's on page.
Which slide?
Let me see here. So it actually shows base activity. So it's page 5.
So basically, we've come a long way. We've done a lot of bottoming. This is kind of normal corrective action. Let the market dance a little bit.
Yeah, I mean, it's not funny, but it's kind of, I guess, a little humorous that we're all up in arms about the market pulling back when, number one, you should have expected it to pull back. I mean, the idea that we were just going to blast through 4,500 to 4,700 without stopping for a breather is, suspect in and of itself. But we're down 6% off the highs.
It's been a very low volatility year. I saw a cool, I think Ryan Dietrich stat the other day, like the median drawdown in any given year is like 11%.
Yeah.
So if we closed the year here with just these drawdowns, it would have been, less than usual.
Yeah, exactly. But I do I follow like 2,500 companies in the U.S. and about another 3,000 globally, and what I do is I just have a trend model that buckets them into trending and basing and up and down trends and whatnot. And when you do that in the long term, despite what the S&P might tell you, because we all know the 9 strongest stocks in the market, people say it's 10, but it's actually 9 because Google's in there twice. But over half the market is still in a long-term downtrend.
Okay. What are you using moving averages? I really like this.
It's basically moving averages, highs and lows, but it's not a standard moving average throughout, and it's not a standard high and low throughout. So it's not like the 13-day or 13-week high. It's actually the model goes through and picks for every stock what the relevant high is and low.
How high did it get back in July? How high did that reading get of stocks in uptrends? Do you know?
This is as high as it's been.
Oh, really?
So remember, we're talking about the long-term chart. So even though, if you want to look at it, if you go to page 6, this will actually show you a little bit of an update on where we are. But
yeah, 1 second, because I have my charts are in a different order than your charts. But 1 second.
Oh.
Also, we have JC here. Let's get JC on. What's up?
Hey, Dave, what's going on, my man?
How are you?
Oh, just dropped off my daughter at her first day of school. Big day around here.
Really? That's exciting times. I just dropped my son off at his last year of college, my youngest.
Let me just tell you how happy I am that I don't have to go to school. I get to get my ass kicked in the market instead,
Yeah.
Big day.
But anyways, it's good to see you, JC.
Likewise.
And thanks for having me on the show. It's always good to be on. But when you look at the trend in 3 different time frames, the reason you do that is we're all trying to capture that intermediate term swing that can last for months, if not quarters, right? We haven't seen many of those in probably a couple of years, but that's what we're trying to capture. The reason I follow the trends in the long term is because they provide the context for those trends that we're trying to capture. And then the short term just gives you a sense for the tactical nature of what's happening in the market. And so all of that is to say that as I said earlier, that 54% of the market's in a downtrend in the long term. As we've pulled off 6% off the highs here, the only area where we're seeing, there it is there. The only time frame we're actually seeing any destruction at all or deterioration at all is in the short term. So you can see we've seen a net minus 199 charts that have gone from uptrend to downtrend. So when you look at the long term, it's basically we lost 1 chart, and when you look at the medium term, we've lost 10 charts. All of the destructions happen on the short term. If you go back to Dow theory, and Charles Dow would talk about this long-term time frame captures the fundamentals of what's going on in the world, and then as you move into medium term and short term, that all captures people freaking out about the fundamentals. So from what I can tell, the fundamentals are not great yet. They're getting better. They're definitely getting better from where they were obviously in October. But whatever destruction we've seen in the short term, it's just people freaking out.
What is the up base activity and down base activity?
Yeah, so we're looking at up base exit and up base entry. So if you're in an uptrend, you can either be in an uptrend and go back into a base. So it's still fine. It's just basing. So we've seen 238 stocks in the short term go from an uptrend into a base of an uptrend.
Yep.
And we've seen 5 stocks go from a base of an uptrend back to an uptrend. So you can net that out, and you can see that it's negative 233 in terms of net base activity. And the same thing with reversals. We've seen one stock reverse in the short term into an uptrend from a downtrend, and we've seen 200 stocks reverse from uptrends to downtrends.
So I love this so much. We're gonna have to do something like this internally. We're going through the charts and we're seeing, a lot of these, bases and textbook reversal patterns are falling back into the box, right?
Yeah.
Back below that breakout level when we were like, oh, this base was completed back in May or June. We internally created 3 criteria, which was momentum in a bullish regime, 200-day moving average has curled and sloped higher, and above either the August or year-to-date highs, right? Because that's typically the line in the sand for these base breakouts. And back in July at the peak, we were just over 50% in the S&P 1500 completed bases that checked all those boxes.
Yep.
We've since fallen back below. We're somewhere in the 40s now.
In the
but
40s.
it's
Okay.
far more detailed. We have to do something like this. This is great.
Yeah, I mean, the reason I look at hundreds. Like people say they look at thousands of charts a day. I don't think anybody really does that, but I do look at hundreds of charts a day. At least if I looked at 1,000, I'd be sleeping by 257. But I look at
you can hang
hundreds
out
of
with me,
charts.
Dave. We'll look at them together. It'll be fun. I promise. You won't be falling asleep. Trust me.
I do look at lots of charts, but the point is that the reason I do it this way systematically is because number one, there's like 5,000 charts that I can look at. So this just pulls them all together, and I can just change the country and know immediately, like Japan and India are the best countries right now from a trend perspective. And I can do that in seconds because I've systematized it. But then the other reason for doing it is this is a very bias driven endeavor. And I can't, there's nothing that I can ever do to prevent myself from being biased. All I can do is actually control and recognize when I am being biased and put these sort of buffers around myself to prevent myself, and systematically monitoring trend evolution over time tells me what is, as opposed to what I want to hear and what I want to see. And
so that's interesting. You're almost like saving yourself from looking at the
100%,
charts. Because
yeah.
when you look at charts, that bias can enter the picture. When you just systemize the charts for the indicators of the things that you should see on a chart to make it bullish, and you let the computers do the work for you.
Yeah. And if the model has done a good job of defining trend and then identifying those levels that need to be broken in order to inflect trend, then technically, I still look at a lot of charts, but I technically don't have to look at the charts anymore. I can just let the process do what it's, guide me to do what I'm supposed to do as opposed to what I want to do. So hopefully most times that those two things are in unison, but at turning points and at times like this, when it's not terribly clear, it's a lot more difficult to know what to do. And so systematizing it helps a lot.
How has your process evolved over time, David? Like, earlier on in your career, what percentage of your process was systematized versus today? Like, I would imagine that number.
Oh, it's gone from 0 to 99%.
That's incredible.
So I want to say, it's funny. I say 99 because therefore meaning that it's not 100. And the reason is because I still, you can do everything you can possible to systematize trend and try to identify those things that you have intuitively learned about trend, and just try to build a model to do that. So you don't have to fall prey to bias and everything else. Plus you can scale the process a lot more, et cetera. But when I back test the models that I have, I mean, they actually do pretty well without me even doing that 1%. So that 1% is probably my own bias creeping in, saying, well, I must be part of the decision-making process because it's about me, Well,
listen, I don't want to take over the conversation here, but I want to be selfish. We got David Lundgren in the house. Can we talk about bonds, please? Can we talk about bonds? Because me personally, I can't have a serious conversation about the stock market without talking about bonds. And by the way, that's not just in this environment. That's just historically.
It's critical.
But we've been overweight bonds in our conversations and videos the past few weeks. Really overweight bond talk.
Overweight bond talk. Okay, fine.
There's been a lot of bond talk.
I started nibbling on the TLT on Friday, David Lundgren, and I am getting abused by my own colleagues, All-Star Charts employees, friends on the internet, trolls on the internet, obviously. Everybody thinks I'm crazy. Now, granted, it's just nibbling, nothing, these are not big boy positions yet, but it smells fishy, David. Smells like some fishy's going on in the bond market, and I want to hear from you. And don't let Strazza sort of sway you. I want to hear what you're thinking.
Yeah, I mean, so this chart here, this is from the this series of charts references the last time the U.S. debt got downgraded. So maybe if you back up a page to page 8, there. So and then this will get to your question, JC. And then I do have a final thought on it that I kind of I wouldn't do it because I don't buy downtrends, which is what you're doing. Granted, you're doing it in a small amount, but
zoom out, David.
What's that?
Aren't you the one who tells me to zoom out and look at the long-term trends? We're talking 40 years here.
Well, yeah. When you look at the long-term trend, it's you broke a 40-year downtrend, so yields are going higher. So if you're buying the TLT, you're definitely going against every time frame of trend unless you found a downtrend on the tick chart.
Well, everybody seems to agree with you, David.
Yeah. Well, so including the market.
Oh, there we go. Oh,
But
I see what you did there.
so this is just showing you what happened the last time the U.S. debt got downgraded. So this is 2011. It's almost 12 years ago, and I remember the narrative at the time was this was. Remember, this was just after the European debt crisis. It was just after the global financial crisis, and we also just had a flash crash. So the investor nerves were raw, and if you needed any reason to take this market down, you pretty much got it. The U.S. debt just got downgraded, and the narrative back then was very negative on bonds in particular. So obviously the stock market got slammed pretty hard, but within about 6 months it was back to its highs again. And then if you go to the next chart, this shows you what happened to the bond market. So I don't know if this is on if you have to like press the annotations or whatever, but yeah. So right there is where the downgrade happened. If you flip one more again, just to point out where it was. So bonds, when the debt was downgraded, bond yields actually plummeted, and inflation expectations actually plummeted, which was completely contrary to what everybody thought was going to happen.
I was just gonna say, am I seeing this chart backwards?
Right. But what we know is that that was the environment back then. We were like the fact that we're talking about inflation right now was like nobody even mentioned inflation for 20 years back then because there wasn't any. And we were still fighting deflation and doing everything we can to ignite the economy, and et cetera, et cetera. So that was the backdrop to the last debt downgrade. So now if you go to the next page, this is the backdrop to this debt downgrade. And so it's very different. So what I'm concluding is that this downgrade could be very different, certainly for the bond market, and so because the environment, the market was already predisposed and already biased to going higher. So all you just need to do is keep adding reasons for it to go higher, and it will, because it's already biased to do that, which is opposite of what happened in the prior downgrade. But if you do look at this chart, JC, I mean, things work in 5 waves, and then you have your correction. So it's possible that this breakout, like triangles, happen in 4th wave. So this kind of looks like a triangle on the 10-year yield chart. Maybe we go out into new yield high territories, and then we kind of fail, and then have a deeper correction, come back down to the lows of earlier in the year, and then have a bigger base, and then that 40-year trend reversal plays out, and then we actually get a more meaningful move higher.
My grandmother just called me. She says rates are going higher. What we should do about it? So.
Yeah, that's all 5th wave type stuff, so that makes sense to me.
And then hold on, let's backtrack for a second.
Yeah.
David Lundgren, correct me if I'm wrong, is not sitting there all day, every day, counting Elliott waves, 1, 2, 3, 4, 5, A, B, C, zigzag, this. But we are aware, and stop me if I'm putting words in your mouth, but we are aware of the way markets behave. And when he's talking about this is 5th wave behavior, what he's essentially saying versus counting 1, 2, 3, A, B, C, zigzag, this, it's more like the type of environment when we're referring to a 5th wave, sentiment is already, getting extended. There's already been a big move in that direction, right? There's a lot of characteristics of a quote unquote 5th wave. Did I get that right?
Yeah, 100%. Fifth waves are about ends of a move, not maybe not the end, but an end to the move. So this, rates may be moving higher in time, but one of the characteristics of a 5th wave is that it's highly divergent with the peak of the 3rd wave. So that's when you start to see big momentum divergences, breadth divergences, relationships break down, where things that have generally moved higher with rates, maybe they don't move to new highs with rates moving to new highs. And so these things start to break down in terms of supporting the higher rates call, and then rates just kind of correct. And that's very, very similar to what you see at 5th wave move. 5 wave moves higher, and also 5 wave moves down. I mean, you start to see bullish divergences, and breadth doesn't confirm and all that. But you were making reference to Elliott wave. I mean, I'm by no means I'm explicitly not an Elliott wave investor, but I've read that book probably 5 times, because from a market behavior perspective, it's one of the best books you can read. I mean, there are so many gems in that book, the Elliott wave principle, that I'd put it on your reading list if it's not on already.
In the old days, David, when we had to take the CMT, I'm not sure what year. You probably did it before me. When did you finish your CMT?
2011.
Oh, wow. I got it done before you. How about that?
I have a story for you on that if you want to hear it.
Shoot.
So I took level 1 and 2 and then level 3. I failed level 3, and that was back when it was essay. And on the exam, basically they told you to analyze these charts, tell us what you think, and then after the exam, basically close to what I said in my replies pretty much happened in the market, but I somehow managed to fail. So I called Ralph Akinpora and I said, Ralph, not for nothing, but could you at least take a look at it and see if this is legit? Because I think I have a pretty good case here. And he said, you absolutely sound like you have a good case. Let me look at it. And then about 2 weeks later, this is my story pales in comparison to what I'm about to say, obviously. But 2 weeks later, the towers were hit, and all the exams were in the towers. And so, obviously, months later, letting everything settle down, I reached out to them again and see if we could take the situation up again. And they said, unfortunately, you need to take it again. And at that point, I was just like, no, I'm not going to take it. So then years went by. And then I started working at Wellington, and Frank Texera said to me, you don't have to get it, but you really should get it, which was his way of saying you should get it. So I went back to the CMT and said, I'd like to take level 3 again. And they said, well, unfortunately, so much time has passed that you have to take all 3 again.
Oh my God.
So I that's 2011 is when I have it. So I actually got my CFA before my CMT.
Wow. But which one's more valuable?
Come on.
The CFA helps you get the job. The CMT helps you keep it.
Look at my name.
That's true. Touche.
I'm one of the very few that does that. I think Craig Johnson does it.
David.
Well, as you should, because you're smart. Hold on. But the reason that we brought that up, just for the record, is because in the old days, when you would study for the CMT exams and the whole curriculum, you actually had to read the books. And the Elliott Wave Principle was one of them, and John Murphy and Edwards and McGee and all these things. Now they have like this curriculum or whatever, and I'm sure it's fine, but I would encourage anybody who's taking the exams, do the curriculum thing like they tell you to do, because that's going to help you pass the exams. But if you're in this to make money in the market and have a career, read the damn books, right? David, can you tell them to read the books?
Yeah, the classic books, you have to read them. I mean,
they don't listen to me. They don't listen.
Everyone listens to you. What are you talking about?
Nobody listens to me.
All right.
Do they still do that where you can lose your exams? Is that still a thing? Do you know?
What do you mean lose your exams?
Like if you pass 2 and don't
Get
take
going too far.
Yeah.
Yeah.
That's still a rule? Oh, who knew?
Strazza's like, oh man, I better take that level 3.
All right.
Strazza's one exam shy, and he's been busy doing other things.
No, but David's story is actually really nice, because I've been sitting here like, oh, poor me, because I was supposed to take level 3 and then COVID happened, and like I got delayed twice. And I was like, oh, this is terrible. And now it's been 3 years and I haven't gone back to do it. You had it much worse off, and you still went back and got it. So
yeah,
well,
I'm glad I
David,
did.
David,
David,
you know Kimmy Sokoloff well. You want to stick around for a couple of minutes?
Of course.
Do we have the power to bring a fifth?
It's a party.
Sure. Do we?
Yeah, David and Kimmy know each other. Bring her in.
All right, let's do it.
I'll drop off.
Kimmy.
Hi, David.
Hey, Kim, how are you? Good to see
Good.
you.
How are you? Nice
Doing
to
well.
see you.
Yeah.
See, we're just
I met
bringing back
David.
old pals, you know?
What?
We're just bringing together old pals.
Yeah, exactly.
Right, David. You were with Frank at Wellington, right?
That's right. Yeah.
My little idol over there, Frank Teixeira.
I know. Yeah, he's a good
Everyone's
man. I was
a
just
fan
talking
of
with him
Frank.
yesterday.
Frank is
What?
great. David.
He's a good man. I was just speaking with him yesterday.
Oh, good. Tell him I said
we said hi.
I will.
Tell him we
Thanks.
said hi. David, Kimmy, I don't know if you're aware, but Kimmy is absolutely crushing it for us. You asked me about and how she was doing in New York a couple of months back, and I'm like, she's killing it. By the way, for the record, she continues to kill it. 4 for 5 yesterday, shorted Adobe, bought Airbnb, shorted Tesla, bought MicroStrategies, one loser McDonald's. 4 for 5, David. This is just another day in the life for Kimmy.
That's a machine. Just pour the money in.
It's really like a machine.
Now. Thank you, JC.
You got it. Can we talk about Nike? Can we talk about Nike? What are you seeing here?
We'll see. I'm trying to see if I could bottom fish. We'll see. Sometimes bottom fishing, it keeps going. Like, it's down obviously because of Foot Locker. So I'll see if it holds on to like the 95 area. Maybe it bounces up to like 100 or so. Merck is gapping up this morning. I'm going to be watching Merck as well. It can never get going above the 200-day. I love my 200-day moving average. That's why McDonald's yesterday kept holding the 200-day. It's like trying to stick save itself. Although I'd like to short it, but it's already gone down a lot. So I have to see if McDonald's can push through. Couldn't push through yesterday, so I didn't feel like sitting in it. So I'll watch Merck. I'm going to watch Dick's again. Another gap down. Retail's just getting hit. Retail's just having a really hard time. I thought maybe back to school would get a little momentum in it, but I guess not. So we'll see.
It's really these old school retailers is really what it is. Like Foot Locker. Like, can someone explain to me why their employees have to dress like a referee? Like, that doesn't make any sense. Why do they do that? Like, seriously. People still shop at Foot Locker.
Uniforms. Like Target, they all wear like red tops. I guess they all kind of, no? Well, I don't know. Don't they all wear like Dick's has like a logo on it, don't they?
I feel like Dick's are more normal. I've never been to a Target before.
What? You never been to Target? Wait, what'd you say?
What am I gonna do? What am I gonna do at Target? I've never been to a Target. What am I doing in a Target? David Lundgren, how about you? Have you ever been to a Target?
Oh my God!
Maybe once or twice.
Kimmy, why would we go to Target?
Kimmy, I got your back. I was just overhearing this. Are you guys crazy? Never been to a Target?
Why would we go? David, tell him. Why would we go to Target?
Ask your wives. Have they been to Target?
Definitely.
I've been to Walmart a bunch.
Oh, okay.
I just don't know why you go to a Target.
JC's never been to a Home Depot either.
Oh, I live at Home Depot.
I think I've been to a Home Depot.
He's a Lowe's.
I've been to a Home Depot. I'm a Lowe's guy these days, but
okay.
I'm a dad. I'm a father. I have an SUV. I have a Thule. We go on family road trips.
You've been to Home Depot.
I just got a Thule, David. I'm very excited about it. Very exciting.
Is it Thule
for the kids? Is that where you put the kids?
That's where I want to hide sometimes, actually.
That's his latest dad flex. The Thule.
It is. I'm way too excited over a plastic box for the roof of my car. It should not be this exciting. So this is like my first big time dad moment where I'm like, I'm overly excited over nothing. So that's what's going on.
So I heard Strazza, you didn't finish the CMT. What are you doing? Good job finishing, David.
Don't mention it. No, I promised Joelle when we were in Asia that I'm going to do it early next year. So.
David, oh my God, I can't believe that you had to take all three all over.
All three over again. But I'm glad I did. Because it was, reacquainting myself with a pretty serious body knowledge. And by then, the whole Elliott wave thing had been kind of tampered down a bit. They still had the important elements of it from a philosophical perspective. But I'm glad I did. It kind of reacquainted me with the community quite a bit more. And I'm actually very involved with the organization now, still on the board. And it's a great organization. So,
how many years?
Sorry. Go ahead.
How many years were in between when you took the first two and the last one?
Well, 2001 would have been the last one. Would have been the one that I failed.
Yep.
And then probably 2008 or 9 is probably when I started the second round.
Wow.
Well, we're all glad you did. And you're very helpful at the CMT Association. It's not just the Tyler Woods show, right? Poor Tyler.
Yeah, no, although it's, thankfully, if it ever was, that would be just fine because the guy's a rock star.
It's true. It's true. We got to have him back on the show soon.
I'm an oldie, guys. I did mine in 2005. I was all done.
Good for you. Was that
my exam? You probably graded Lundgren's exam too.
Yeah, I've been graded for like 8-9 years now, a long time.
I have Dave Keller's signature on mine. So
I don't know who I have on mine. I got to go back and see. I don't even know mine was in 08. I finished mine in 08. Perfect timing, by the way.
Yeah.
Good year.
All right,
for
guys,
us.
I have to hop.
All right, Kimmy, go do your thing. Keep it up.
Bye, Kimmy.
David, have a great day. Nice seeing you.
You too.
Bye.
Hey, should we talk about this grab holdings? I guess David's just hanging out.
David, you can hang out as long as you like. You want to tell everybody where they can find Kimmy, by the way?
It's a free country, David. You're also free to leave if you. I don't want to put you out or anything. He's been here.
Yeah, no, I got to hop, but Great to catch up with you guys. Definitely. Thanks again for having me on. It's great to see you all. Straz, get your
Sure.
CMT, would you please?
Yeah, seriously. Tell him, David. And
You're
read the
inspired.
Elliott Wave book. Everybody read it.
100%.
You're inspiring me this
Several
morning, David. I will.
What's that?
You're inspiring me this morning with your story.
There we go.
I'm gonna
Love
do
it.
All right. Thanks a lot,
All
David.
right, nice. Thanks, David.
See you guys.
Like I hung out for like 40 minutes with the.
I mean,
Man, David Lundgren is the
treat.
man, dude. He's definitely one of my favorites. And he worked with Frank. He worked with Frank for a long time.
Yeah.
Frank also one of my favorites. Different David and Frank, like similar in some ways, different in others. That whole crew, and Kimmy's a big fan of theirs as well. That's why I was like, oh, you know what? Stick around. Why don't you tell everybody where they can hang out with Kimmy? Because 4 for 5 again yesterday. You dropped the link.
Yeah, link was on the screen and link is in the chat. Yep. So okay. What else? We're gonna have Mary on in a sec here, but before that, there was lots of stuff we didn't get to.
we do a really nice job on the show. You know, we cover everything that's moving every morning. We talk about earnings, we talk about charts, the state of the market, right? Share our perspective. But that's really what this show is all about. Like David Lundgren just came and hung out for 40 minutes, talked about his process, talked about what he's seeing, talked about the bond market for JC.
For JC,
awesome.
I'm the only one that cares about the bond market.
No, but I mean, how awesome is that? That, you know, our friends like this just stop in and we'll just talk markets with us, shoot the shit for like 30, 40 minutes.
Nice to have smart friends. Let's check in on the market. Strazza is right, by the way. We shouldn't take that for granted. It's pretty cool. Let's check in on the futures. 30-year futures up 1% in the pre-market as everybody wants to short them. Dow futures up 50 points. S&P's up 25 basis points. NASDAQ up 30 basis points. Gold up 70 basis points. Silver ripping this morning up 2.7%. Copper up 40 bips. Oil down 2%. And dollar kind of mixed. And volatility index down a little bit with yields getting slammed today.
So you're already, yeah. All right. So what are you saying?
I said a lot of things. I said that the Dow's up 55 points. So I don't know. What am I saying? I'm saying the NASDAQ's up 35 basis points. Silver's ripping 2.75% in silver. That's a lot. No?
You know, somebody was asking about silver this morning. It's kind of how it goes with these assets. Up a little bit for one day and everybody's talking
What
about
do you mean, you people? Yeah, man, silver. That's impressive. I mean, listen, there's nothing to sneeze at. Despite a stronger dollar, just an FYI.
You know, copper's moving too. How come nobody's talking about copper?
I just said copper's up 50 basis points.
All right. So you're already victory lap.
It's not 100 basis points like the 30-year futures.
Oh, so you're already victory lapping your TLT trade?
First of all, nobody's victory lapping. I have a tiny position. So let's say it was up 30% today. I would be upset because I don't have a position big enough to profit. So there's no victory laps here. If anything, I'm up a little bit on an irrelevant small trade. So there's no victory laps here. And even if it was a huge, we don't do victory laps here anyway, for the record. But yes, there's no victory lap. I barely have on a position. I might put on a big boy position later today. I guess we'll see. No?
All right. I'm rooting for you.
I doubt it. I don't think you are. I think you want to see rates go up, and I think you want to see the bond market continue to crash.
No, I don't. I don't. As someone who is bullish and doesn't want to get stopped out of all the stocks I've been buying for the past 3 quarters, I don't want to see rates rip higher from here. Right? I would probably have to change some things up with the way I'm invested. So, not hoping for that. But
all right. Well,
Straz, did you want to do grab?
I do want to do grab. Can you give me the lowdown here? This is. Can I talk about grab?
Yeah.
Yeah, it's going up, which you can say about a lot of these companies reporting earnings this morning.
They're just about break even, from what I'm seeing, right?
Just about. They're knocking on the door on an EPS basis at least. Can't speak.
So this is the Uber of Asia,
Southeast Asia. So some of these countries do have Uber presence, and you will use Uber, and it will be hard for Grab to compete in those places. Other places like Vietnam, there's no Uber. Uber doesn't want to be there. They actually sold their book of business in a lot of these countries. for different reasons, divested from them, and Grab has kind of taken over. So like Vietnam, it's all Grab. Malaysia, it's all Grab. You got to take Grabs everywhere. They also deliver food. It's the same thing. And when I look at the chart, I mean, this is an interesting growth story. They are everywhere. And like I said, the countries that they're in, it seems like they won't have that competition from Uber because Uber's already been there and left, right? So it's kind of like Grabs for the grabbing. And if this reversal pattern breaks higher, what is it, $4 here, those pivot highs, it's really clean. I've marked it up with all these nice green and red indicators to show that the 200-day moving average is flattened and curled higher, indicating the primary trend is shifting upwards. Momentum is in a bullish regime. You see that in the middle pane. When you look at the relative strength trend, this is just Grab relative to the Russell 3000. Basing, right? It looks a lot like, if we were to zoom in on this and widen it out a little bit, it's a little tight there, but it looks a lot like the absolute trend. So want to see that confirmation. This is interesting. I don't hate this. I didn't have the best experience with it out there. Definitely not as good as Uber. Sean and I got left on the streets of Singapore for like an hour with like 4 Grabs driving by us. I don't know what we were doing wrong. We were doing something wrong.
Wonderful.
But I barely used it. Didn't love it when I did. But I like the numbers here, Spencer, right?
Robert Wilco in the chat. I'm sorry, Roberto Wilco in the chat. If it helps, I live in Chiang Mai, Thailand, and Grab is huge.
Yeah, that's it. No Uber in Thailand, right, Roberto? I don't remember Thailand because I was taking tuk-tuks everywhere anyway.
Yeah, it's true. Not exactly.
But I don't remember.
Yeah.
I don't think Uber's in Thailand. So Uber was in Hong Kong. Uber was in Tokyo. Yeah, but the other.
I like how all the Ubers in Amsterdam were all Teslas. That's cool.
Yeah, all the Ubers in Tokyo were like these just amazing Toyota like monster vans with like movie theater seats and big widescreens.
Wow.
All right. Well,
is Lyft only in the U.S.? It must be, right?
and it's probably it's not even in the U.S.
It's over.
It's just Fugazi.
No.
How about a little hot corner? Because we got some action today.
What kind of action? Right. I can't wait to hear what kind of action you see on there.
We got action, baby. Let's go.
Let's do it.
All right.
Hot corner. So hot right
now. What kind of action? Well, Mr. B. Riley at it again, and not a piker purchase. What is it? 1.2 million almost? $1.2 million? Punch up the chart there, slide 1. B. Riley Financial. So the chairman and CEO, Mr. B. Riley, is continues to acquire shares of B. Riley Financial. Sounds to me like somebody who's informed in what's going on inside the company, and he's buying a ton of stock. And is he buying a ton of stock because he thinks the price of the stock goes lower?
No.
You think that's the reason?
There's an ownership thing going on here with the family. Pretty sure. He's been gobbling up stock. You remember since last year in pretty big size.
So this is a voting thing. This is like what's that show that everybody likes with the family that is always having problems? The rich family.
Succession.
Yeah. Is it like that?
Watch it. Yeah, you need to watch that one.
I watched it. I just don't get pleasure from like rich people problems. Like I don't know what kind of sick person likes to like. I don't see it.
I don't get it. I'm not a big fan of the Eat the Rich theme either, but this one was a little different. It was an excellent show.
All
right, moving on.
I've seen it, for the record. It's not like I haven't seen it. I've seen it. It's fine. I guess.
You sound like you haven't seen it. You sound like you haven't seen the whole thing at least.
I saw the end. They were in Lake Como or in the one next to Lake Como.
Don't ruin it. Sean is in the middle of it now, and he's probably listening.
Oh my God.
So Expensify back on there again. Me and Sean's brainchild, Stephen McLaughlin, buying more stock. Not as big of a purchase as we've seen in the past few weeks. And then the one that really stands out to me is this Mercury Systems, MRCY. You know what they do, JC? You know what Mercury Systems is?
I see aerospace and defense. My suspicion is they're not building engines or airplanes or something fancy about it.
You are from Florida and should know this.
First of all, I moved from Florida when I was 18 years old. I am now 41. So to call me a Floridian is, no.
Mercury engines. The boat engines.
Oh, get out of here. For real?
Yeah.
All right. Well, then why are they aerospace and defense? They're building engines for other stuff too, obviously.
Engines. Yeah.
Oh, I see what you did there with the Florida thing. See, you are a Floridian, right? You are a true Floridian. So God of Mercury. Yeah, sure.
I mean, it's a big thing. Like if you talk to boat people, you got to have a Mercury, right?
Listen, the best boat is having a friend with a boat. That's the best boat to have right there, right? That's how to do it.
Fact.
That's how to do it.
But look, the chart looks like crap here. So maybe it's going to be one of those not a top. We don't have the chart. We don't need it. Trust me. You don't need to look at this.
MRCY, huh? This thing's a real.
Maybe it's not a top. We'll see. But
the boat engine business is not very good, apparently.
No, better looking charts out there.
All right. Anyway, I thought that the B. Riley situation was interesting. I guess you didn't. That's okay. We're all entitled to our opinions.
I like the Jana Partners buy in Mercury.
And then excuse my ignorance, but what is Jana Partners known for? In my head, like they're like a Vanguard. Is that not right?
I don't think so.
Yeah, I don't think so either. I'm totally making that up. I also thought that the Fed Minutes was a podcast. So like I'm not exactly when it comes to this sort of thing.
It would, if you check their website, it's event-driven investing. It's Barry Rosenstein. They engage in traditional shareholder activism and get this is so 2023 of them, socially responsible investing.
Oh, that sounds terrible.
Got to do it.
I was confused.
If you're investing socially responsibly, I don't want to invest with you. I want you investing to make money.
Never mind.
Right? Like if I'm giving you money, I want your number one goal is to make money, not do it like a different way that's going to make less money. Like that's no.
You know, Carl Icahn lately has started to do that too, right? Like back in the day, he was just a corporate raider. He would come in, get his money and go. What was it, Kroger, where he was complaining about the employee wages and the pay and wanted to do stuff to increase the pay and where the chickens were raised and stuff. I read his letter and I was like,
his net worth is tumbling since he started doing that. So how's that working out for him?
I remember the chicken thing.
You remember that? And I read it because
a few months ago, he was all about the chickens for some reason.
Yeah. All of these ESG things were in his letter to the board. I remember reading some of Carl Icahn's letters back in the day, like when he came to Apple and made him start paying a dividend. Like this guy was a boss. Now I was like, oh God, what is
he's getting soft at his old age, man. I hate to say it, because Matt, nothing but respect for Carl Icahn, but I hate to say it. You know,
thing. Look at what it's doing to people. He's having one of the worst years ever. I mean, literally, if you had to say, okay, through the first 8 months now of 2023, who is having the worst year? Like top of that list. He wishes he retired. This is bad for them. They're gonna have to buy back all this stock, get this thing off of the exchange, and try to pretend it never happened. But a little late in his career for a disaster like this. These hedge funds should not do this. They all try to list like these like public funds, and none of them are like good trackers of what it's. I don't know why they do it. I'm sure they're bringing in money from it, but it seems like reputational risk that they don't need to be taking.
Come on, Uncle Carl, with this ESG nonsense. Like it was a scam. It was a great scam. People who were bad at math donated their money to Wall Street executives, kind of like the same old thing. But like we already know, like we're past that already. It was a great scam. It worked great. People who were bad at math lost a lot of money. Great.
All right. What hedge funds are like killing it these days? Like you don't read too much about them anymore. You remember like earlier on in our careers?
Citadel.
All right, but are they even ahead? They're a market.
Einhorn, I think Einhorn had a rough go of it, but he's come back.
He sucks.
I think with a vengeance. The last couple of years, Ackman had some really good pandemic trades, and then some bad ones afterwards.
Wow. All right.
I mean, he got smoked on Netflix, but he made so much money shorting bonds into COVID. So anyway,
Ken Griffin only returned $66 billion in profits last year.
Okay.
So
yeah,
no
Ken Griffin and Citadel are killing it. I still consider them more like a high frequency, like market maker.
Yes, they
everything over there. These guys are
good for them.
Yeah.
Good for them. The funny part is when they bought the Constitution, you know, kind of just to stick it to the Dow people. That was funny. I appreciate the
Yeah.
comedy. You know, I didn't get screwed. I didn't win in the situation. I was just an observer. That was pretty funny. That was a good move.
Right.
Yeah, that was
Shoot.
great. I loved that. So something in the chat, JC. Strazza went north to south. JC south to north. So who's right?
Well, JC went south to north to west, back east. The west part was the Strazza's starting to figure that out now.
Yeah, no West Coast for me. But yes. No, but we both like both places. JC's down in Miami visiting all the time. I'm up north in Connecticut and New York visiting all the time. I don't know. I think I made the better trade.
There's a time and a place for everything. Where Strazza screws up is that he likes to hang out in the Northeast in the winter and he likes to hang out in the Keys in the summer. But that's another story.
The holidays do that to you, right?
I guess.
All right, let's bring on Mary here. It's Wednesday. We do mornings with Mary. She is probably a power user first, right? Power user first, member concierge second, and she's always making trades based on the research that you guys put out. So let's see what she's done this week. She's pretty active.
Right. Mary, what is this nonsense that Spencer's spewing that you've been very active? I thought you told me you were sitting on your hands in this market. What's going on?
Spencer hasn't talked to me in the last week. I've been sitting on my hands. You and I had that conversation a couple of days ago, or maybe end of last week. Yeah.
But usually, though,
But
all right.
still
I knew that. But usually, you're active.
You can relax.
Hold on.
Stop putting words in Mary's mouth.
No,
why
okay.
are you sitting on your hands?
Well, we've been pulling back. I've just kind of been waiting to see what is going to transpire from here. So, obviously I know JC doesn't like to listen to the news, but we've got the NVIDIA earnings tonight, and then we've got Jackson Hole, or however you say Strazza, which is very funny. And that's gonna change things. And so I'm kind of waiting to see how things shake out, because I do like to trade more on a shorter time frame, not quite as short as Kimmy, although I do day trade with her sometimes as well. But I'd kind of like to see how things shake out and then kind of reevaluate where we might be headed. But with that said, I did find something interesting that I do have my eye on. I'm not sure if you guys have talked about this in the last couple of days, because I have been busy getting kids off to school. They went to school for the very first time this year. Yesterday, it was the first day of school.
Too.
I know. How did that go, JC? Because this was your first time dropping a kid at school. I mean, were there tears? Your wife hurt? What happened?
I took it okay. The little princess and the big princess didn't take it so well. The little princess didn't want to stay, and the big princess was sad to drive away. And I was just, trying to keep them all together.
hold everyone together.
Yeah.
Well, I hope she has a fantastic day. That's going to be really exciting for her to explore this new world.
Yeah.
So what I have had my eye on, and again, tell me if you guys have talked about this, I brought a chart, AMR, Alpha Metallurgical Resources.
Oh, yeah.
Yeah, that's good. So what has been interesting to me about this name in particular, we've got, the 15-month long base. I mean, who doesn't love a great base, right? Big base. And this just came up on a scan that we run at All Star Charts called Under the Hood. This was just reported yesterday. And then what I kind of did some digging back, Ian was talking about this exact same name back last Wednesday on What the Fick. And then if you take it back a little bit further on another one of our scans, the Minor Leaguers, our small caps report, this showed up on August 14th. And so when I start to see names reoccurring over and over and over again, I start to take notice. And so
good indicator.
Yeah.
What was the last one that you mentioned that it popped up on, Mary?
Minor Leaguers on the 14th.
Yep.
Yeah. So all these scans are coming from All Star Charts premium service. It's probably my personal favorite because it's our total market service. It covers all the asset classes, including the commodities. And one of my favorite parts of the service, besides all these wonderful scans and universes, is our conference call, which ironically enough, we are having our mid-month conference call this evening. So if you have never had a chance to check out All-Star Charts Premium, all of this amazing research that our guys put together and our team worked so hard on, drop us an email at questions@stockmarketmedia.com or shoot me an email, Mary@stockmarketmedia.com, and I am going to hook you up tonight.
Throw up chart 1, Spencer.
Or you can also call Mary.
Oh, yes, you can call. It's just, right now I'm talking.
Anybody who calls you gets access to tonight's call?
Exactly. Yep.
Did I approve this? I don't know that I approved this. Is this okay?
We talked
Am I going to have to take this up to the board?
You have preschool on the brain, but we talked about it yesterday.
All right. As long as we talked about it yesterday. All right. We'll let him in. Call Mary.
I got the boss's approval.
Tonight.
It should be okay.
We got quite the shindig happening this evening, 6 p.m. Eastern time. We'll set the over-under on the amount of charts at 132. You take the over or the under, Strazza?
Ooh.
How many charts? You're going to be under. You're going to be under this. I'm
going to be under 132.
Yep.
Really?
Yep.
I was going to take the over. I already got like 90 of them, and we got another 8 hours until the event. So I don't know. I'm going to take the over.
Who sends you the most charts?
For conference calls?
Yeah.
Grant.
All right. Outside of Grant, because he's a special situation because we haven't done sex. Right.
Yeah.
I see what he's saying. I see.
See, but you didn't realize that I overcompensated for the lack of Alfonso. Alfonso's gallivanting in the south of France right now, for the record. What is this? We're here working, and the Fonz is in the south of France?
He sent me pictures.
Did you send him for some vineyards to check out?
He sent me pictures of himself on the beach yesterday. He's on the beach in, is it Nice? Did I say that right?
He's in Nice. Yeah.
Killing it. Having a great
time. Killing it. He is killing it. Hold on. We're moving too fast.
All right.
Can you walk me through the AMR trade? Do you have a position on?
Chart 1, please.
Yeah. So I started a small position. Like I said, who doesn't love this great base? We're moving up over that 182 resistance. So, 182, 187-ish is kind of where we have that line in the sand. And as long as we're above that, I like it.
Let it dance.
Yeah. Let it dance.
Let it dance. Even 180. Something like this, a nice big base breakout. Don't let yourself get, shook out of a nice pattern resolution like this. Also, Console Energy, CEIX.
Yep, I brought that chart too because that was the second one that I was going to mention. That came up on Under the Hood yesterday as well.
Right. So all these coal stocks popping up on Under the Hood. Hey, now I'll bet they're popping up on the buzz too. We'll have to ask Patrick.
AMR has been on the buzz. I don't know about Console, but AMR has definitely been.
There's a lot of overlap between the two.
AMR, based out of Bristol, Tennessee. Who knew that there was a Bristol, Tennessee, Strazza?
You won't see many better charts right now today, right? Like at this absolute like moment in time, because so many things have rolled over the past few weeks. You're not getting nice fresh breakouts like this. So these names are particularly interesting, right? Because it's that beach ball effect that we talk about a lot, right? If they're breaking out of these monster bases in an environment where stocks are selling off, people are afraid of this corrective action, growth stocks are getting whacked. How are they going to be trending if and when that corrective action kind of, ebbs and we, God forbid, enter a new uptrend, new leg higher?
Well, and for me personally, this is a kind of company that I typically wouldn't gravitate towards. This is not an area of the market that I have a ton of knowledge about or, really have a ton of interest in because what's that?
Is it not ESG enough for you?
Hold on. Mary brings up a good point. Mary, let me ask you this. How long have you been trading actively? Seriously.
About 3 or 4 years.
Got it. So that's
I've been
example.
Managing it for quite a long time, but actively trading.
It's a great example, Mary, because there's a lot of people in your shoes that maybe got interested more recently. They were accustomed to maybe that tech bull market, and someone like yourself who was not around the last time these energy stocks were the leaders. These are the first times that you're trading these names. For some of us who have traded prior cycles. Not only are we trading these names, but these names are the new names of companies we used to trade in the old days, in the last cycle. And you'll start to see that as you gain more experience and you go cycle through cycle, you're like, oh shit, I remember this name. You know what I mean? Like that'll come to you. So the fact that each cycle, you're going to get more knowledge and wisdom on individual groups of stocks and sectors. And it's kind of like baseball cards. You know, you collect these baseball cards over the years, cycle over cycle. And then it's like, oh yeah, wow, that used to be that company. Oh, I remember getting killed in that, you know, right? Like now we're talking about uranium. Strazza is all junked up on uranium. Like I'm still traumatized from the last uranium cycle. Right. So like I can't help but think about it every time Strazza mentions uranium. It's like, oh, I got killed. Some of these gray hairs you see here, those come from uranium trades back in 2010 and 11.
So miss the party then.
No, I'm with you this time. It doesn't mean that my post-traumatic stress disorder has gone away. It's still there, but I'm aware. I'm aware of my biases and I try to overcome them. But I got to tell you, my blood pressure still goes up every time you mention uranium.
I thought your gray hairs were from natty gas.
Somehow, as much of a widowmaker as natural gas is, throughout my career, I've actually done pretty well in natural gas. Believe it or not, it's kind of one of those weird, one of those weird things in my life. I've actually done okay with natty gas.
Can we talk about tech stocks?
Yeah.
Yes, please.
Please.
So, JC, do you have a quick chart of I want to show that 10-year with the RSI. Do you have that handy?
The US 10-year yield with the RSI failing to get overbought. Is that the one?
Yeah. Never got overbought, huh?
Never got overbought because you know why? Because it is very weak. Historically, this is throw up slide 1 there, Spencer. Overbought conditions tend to come with strong uptrends, tend to come in bull markets. A lack of overbought reading here is is evidence of weakness. It's evidence of a lack of strength, exhaustion.
Yeah.
And these are not the types of things I like to bet on. I like to bet on the strong folks, not the weak ones.
How do you have this arrow drawn? What is this? Straight arrow here.
What? I'm pointing to the overbought condition there,
okay.
and the fact that we never got overbought.
So we would look at a pattern like this, right? And if we get an upside resolution, we would look for confirmation. And one of the things we would look to, one of the first things we would look to for that confirmation would be an overbought momentum reading. So your point is we never got one. Do we fail at these former highs? Do we have a situation where rates move lower, with any sort of momentum? JC's buying bonds as a way to express that theme in the market. The way that I would rather do this, because I'm with you, there is overhead supply here for rates, right? Maybe we do pull back a little bit back into this range, more sideways. You could express that thesis through tech stocks too. I really think they're the market leaders. If you throw up XLK SPY, I think it's the next chart, Spencer.
No.
Next chart.
Slide 3.
Slide 3.
Yes.
That's what it was.
Tech stocks have been strong. They've been the leaders, straight line higher since January or December of last year when they bottomed on both absolute and relative terms. Broke out of a nice little, continuation pattern here. In the context of a structural uptrend for tech on a relative basis, when I see a chart like this, right, very much intact, just broke out, textbook retest, why should we expect anything else but more outperformance from tech in the future? If rates roll here, that very much supports that bullish thesis for tech stocks. I think that's a great way to express this, little interest rate failure as well.
Got oversold this ratio. Got oversold on this pullback, FYI.
Okay.
What are you laughing at?
I don't have momentum on this chart.
I know you don't, which is why I am expressing to the viewer who is not seeing the conveniently non-included momentum getting oversold, which is not evidence of a strong uptrend.
No,
I continue to think, listen, Strazza can have all the thesis he wants. I continue to think technology is a mess on both an absolute and relative basis, and they have a lot of work to do, and I need to see it. I got to see it.
I don't know. I don't know.
Listen, Strazza, I'm with you. I think interest rates falling apart. I think it's good for tech. All of that is great in theory, but I have to see it.
What is a mess about this? This was a mess for 3 years. This is a clean breakout, this ratio. Not a mess.
All right. I guess we'll see.
Got a point.
Okay, but throw in momentum. Why is momentum getting oversold? And on an absolute basis, tech is
Barely.
still stuck below overhead supply. Now, granted, NVIDIA can rip and this thing gaps up above those. And you know what? Buy everything in tech. You know, maybe. I don't know. I got to see it. I don't trust it till I see it.
Don't throw out your tech stocks, folks. Not yet.
I don't have any tech stocks to throw out. So,
I mean, that's your own problem.
is it?
Yeah.
I'm pretty sure I've been wise in not owning tech stocks over the last month. I don't own any tech stocks. I'm sitting back waiting to buy tech stocks. I have no problem buying a tech stock. If that coal stock that you showed me before, that AMR, if that was a semiconductor, I'd be long.
All right. Stefan's making fun of my background. I'm ready for recess, guys.
All right. Throw it up.
And I'm going to throw the banner on again real fast. Again, if you want to get into tonight's conference call, the number's on the screen. Call Mary, 323-421-7910.
Give it out.
She will get you.
And it's definitely going to be over 132 charts. You know how I know that?
And don't call her right now, please.
Because I'm the one that makes the decision. I decide how many charts there are. So there's going to be more than 132. So.
Giving out free conference calls over here.
I have inside information.
It's been a minute since we have.
I'm going to make sure it's over now.
All right, here we go.
Spencer, how are the Iron Pigs, bro?
Yeah, great. Honestly, went to the Iron Pigs game on Friday is it in Allentown or next door? Somewhere around there.
It's in Allentown.
Yeah, and they're the top drawing team in minor league baseball, and there was a large crowd. I don't know, I guess there's not much else to do, but great crowd. Spent the whole game hanging out. The reason I was there was because my buddy, my college roommate, one of my best friends, is the broadcaster for a AAA baseball team, and his team, he's for the Jacksonville Jumbo Shrimp, and they were in Allentown to play the Iron Pigs. So I got to hang out with him for the whole game and watch it from his point of view and sort of watch him call the game. It was great, man. It was great stuff.
First of all, there's plenty to do in the Lehigh Valley. Don't be like, oh, the Iron Pigs, nobody's got anything else to do, so they're going to minor league baseball. There's plenty to do around here. We are the 68th largest metropolitan area in the country.
Actually, yeah, I was looking it up. Lehigh Valley, you guys have like 800,000 people in the Lehigh Valley.
We're the 68th largest metropolitan area, third largest in the state of Pennsylvania.
Wow.
I mean, we're an hour from New York City and an hour from Philly. I mean, it's a lot of people want to live here.
Right.
Yeah. So anyway, great experience.
Can I give a future-proof shout out? So
Please.
I'm working on a way to not have to go downstairs during the morning show. I poured a hot cup of coffee in here before the morning show began. Have the top on. It's still hot right now, hour and a half later. So if you're wondering how this company, Yeti, got to $4 billion selling coolers and cups, good tech here. This was a freebie. This was some of the swag that we got at Future Proof last year. So really excited to see what's going to be at the Morningstar booth this year. So if any of you guys are going, reach out to JC, myself, Sean. We'll get together out there.
Strazza and I, we were on the beach at the conference on the last day that we were there, and Strazza's like, bro, you got to go to the Morningstar booth. They're giving away Yetis over there. You got to go over there now. And I like race over there, and I'm like, you got any Yetis left? They're like, yeah. How many you want? I'm like,
You got 2.
Yeah. So I got a whole bunch, and yes, they are great. And I want to give a shout out to National Cuban Sandwich Day, which is today, August the 23rd. Who knew?
Is it
National Cuban Sandwich Day? And just to be clear, guys, Cubans make way better sandwiches than the Cuban sandwich. I don't even like the Cuban sandwich. I can think of a million other condiments I prefer over mustard. I don't like pickles, and Swiss cheese might be my least favorite cheese. I would point you to the famous croqueta preparada, which I highly recommend. The pan con bistec is my personal favorite, which is a steak sandwich with onions and garlic, and then they put the little stick chips, little stick chips,
Oh, yeah.
and,
Yep.
and then some lime with the Cuban bread. I also encourage you to have a frita, which is the Cuban burger, which comes with chorizo inside the meat. So it's kind of like a sausage meat patty sort of situation. And of course, with the little papitas, which are the little sticks. And of course, the Elena Cruz, Cruz, depending on who you ask. And I would, and that's a little bit more funky. You can ask a Cuban about that, but highly encourage you. Not for vegans, but Cubans don't like the vegan community. Cubans go for their meat. So sorry, Jonathan.
So I'm definitely going to participate today. I'm going to have a Cuban sandwich. Unlike JC, I really like Cuban sandwiches.
I
love Cubans.
Right. Can you give us the name? What is your go-to shop if you were getting a Cuban sandwich in Miami right now?
Me?
Yeah.
I don't like Cuban sandwiches. I don't get Cuban sandwiches. I'm the wrong person to ask.
You're getting a sandwich from a Cuban restaurant. So it's just a Cuban sandwich, not a Cuban sandwich.
Well, if I'm going to get a frita, I would go to El Rey de las Fritas, which is like the frita spot. If I'm going to get a pan con bistec, I mean, you can go to La Carreta, you can go to Los Ranchos. I mean, you can go to Versailles, you could go to Islas Canarias. Islas Canarias for the croqueta preparada. Islas Canarias is known around Miami for having the best croquetas. I would argue Versailles has the best croquetas, but someone might stab me in Miami for saying that. Like, Islas Canarias is something that people down there are very proud of. It's a little far for me. It's a little too far west. I don't really go that far.
I've never
throwing that out there. But pan con bistec.
If you find yourself in the Florida Keys, La Nina has the best Cuban sandwiches down here. That's in Marathon.
Yes. I believe it.
All right, and it's 10 a.m. You guys are making me too hungry.
Me too.
My recess is happy birthday to the Index Fund. On this day, 1976, Vanguard launched the very first retail index fund. It took about 20 years for it to catch on, but eventually it caught on, and I think it was a great idea. So,
All right, JC, I need a wine pairing for tonight. I'm doing a filet with a chimichurri.
Let me try.
This is an easy one.
Okay.
Easy one.
Super Tuscan.
No.
Oh,
Chimichurri?
red.
No, you go
Chimichurri.
Malbec, Argentinian Malbec
Oh,
all day.
ooh.
I knew
Come on, you
I've
knew
got one.
that.
Been through this. We've done this.
We've done this before. Argentinian Malbec all day, Mary. All day. Easy.
Awesome. I've got a bottle. So
All
right.
done.
And on
Amazing.
that
I'm gonna have
note,
to go to the
we're
store.
done here. This stream is going to end, and actually it's going to redirect you. We're running late, but our latest episode of Pardon the Price Action is premiering right now. This stream is going to end and redirect you guys to that video. So check it out. Other than that, catch you guys later on What the Fick at 11:30 a.m. Eastern Time with Ian Cully. Thanks to David Lundgren. Thanks to Mary. Thanks to Kimmy. Thanks to all you in the chat. Smash the like. Go make some money. See you guys in a little bit.
Bye, Bonds.
Have a great day.
I can't take no loss. I don't even know what it costs. I hit